Today is Saturday, April 25th, 2026. The stock market is currently closed for the weekend, having completed the final trading session of the week on Friday, April 24. Nvidia stock, NVDA, concluded the week at a price of $208.26, marking a substantial intraday gain of 4.32% or $8.62 per share. While the broader market was digesting a week of heavy earnings data, Nvidia managed to decouple from the general tech noise and charge toward its 52-week high of $212.19, driven by an unusual surge in call option volume and a massive institutional rotation back into AI hardware. To get straight to the point that most retail traders are missing, while everyone is staring at the high price tag, the real movement isn't just in the chips themselves anymore. On Friday, Nvidia quietly confirmed a strategic partnership with Oklo and the Los Angeles National Laboratory. They are literally moving into the nuclear-powered AI factory space. This isn't just a hardware play anymore, it's an energy infrastructure play. The market expects Nvidia to keep selling H200s and Blackwell units to cloud giants, but the reality is that Nvidia is now positioning itself to control the power source of the data center itself. If you're using Fidelity Investments or tracking your portfolio on the Robinhood app, you might see the price going up, but the underlying narrative has shifted from can they make enough chips to can they power the planet's compute. Most investors believe that Nvidia is reaching a saturation point where competition from AMD or internal silicon projects at Google and Amazon will eventually erode their dominance. This is the common expectation that keeps many people on the sidelines waiting for a massive correction. However, the reality of the situation is found in the networking and software ecosystem, specifically the CUDA and Spectrum-X Ethernet scales. While a competitor might eventually match a single chip's performance, no one has matched the networking fabric that connects 100,000 of these chips together into a singular AI factory. On Interactive Brokers, we're seeing institutional activity that suggests big players aren't just buying Nvidia for the GPU, they're buying it because it's the only company that can provide a full-stack solution. When you use Fidelity brokerage services to look at the top institutional holders, you see the same names, Vanguard and BlackRock, consistently increasing their stakes, even at these elevated levels. Recent market movement has been incredibly telling. Over the last month, Nvidia stock has seen a return of nearly 14%. This isn't just retail hype, this is professional capital re-entering the space after the February earnings blowout. On Friday, trading volume hit over 214 million shares, which is roughly 23% higher than the 30-day average. When volume spikes alongside a 4% price jump, it usually indicates that big money is buying the breakout rather than just day traders flipping positions. If you are into online investing or use a SoFi trading platform, you've likely noticed that the volatility hasn't disappeared, but the floor for the stock keeps moving higher. The expectation was that high interest rates would eventually choke out the capital expenditures of big tech, but the reality is that Meta, Microsoft, and Alphabet have collectively committed to spending upwards of $650 billion on AI infrastructure in 2026. Nvidia is the primary recipient of those checks. Looking at the institutional landscape, there's a fascinating trend occurring in Fidelity mutual funds and Fidelity ETFs. Fund managers are increasingly forced to overweight Nvidia just to keep pace with the S&P 500, creating a self-fulfilling prophecy of demand. Even SoFi Invest and self-investing platforms are seeing a massive influx of fractional share purchases, showing that the retail appetite for Nvidia stock hasn't wavered even as it nears a $5 trillion market cap. It has officially surpassed Microsoft and Apple to become the largest company in the world by market value. For those using online investment tools or looking for investment help, the question isn't whether Nvidia is a good company. Everyone knows that. The question is whether the price reflects reality or a fever dream. The fourth quarter fiscal 2026 results, which we saw in late February, were a total beat across the board. Revenue hit $68.1 billion, up 73% year over year. Think about that for a second. A company of this size growing at 73%. It's almost unheard of in financial history. Data center revenue alone was $62.3 billion. The expectation was that margins might start to compress as they ramped up the newer Blackwell architecture, but the reality was a gross margin of 75.2%. They are not just selling more, they are maintaining their pricing power despite the rise of custom silicon from their own customers. If you're managing an individual brokerage account or checking your Fidelity Iris, these are the numbers that keep the long-term thesis alive. The efficiency with which they are returning capital is also notable, with over $41 billion returned to shareholders via buybacks and dividends in the last fiscal year. A brief look at the business model reveals why this isn't just another dot-com bubble. Nvidia operates as the architect of the modern industrial world. They design the chips, but they also own the software layer, CUDA, that every AI developer uses. Switching away from Nvidia isn't as simple as buying a cheaper chip from a competitor. It would require a software engineer to rewrite their entire codebase. This is a massive moat that protects their earnings. Whether you use the Fidelity mobile app or the Robinhood stock trading interface, you are seeing a company that has moved beyond just gaming. Their professional visualization revenue is up 159% year over year, and their networking business, thanks to the Mellanox acquisition years ago, now generates $31 billion annually. They have essentially become the plumbing, the electricity, and the foundation of the AI world. The tension between expectation and reality often comes down to the next big thing. The market is currently focused on the Blackwell chip, but the reality is that the Vera Rubin platform is already being teased for late 2026. This creates a continuous cycle where by the time a competitor catches up to the current model, Nvidia is already shipping the next one. This product cadence is what separates them from Intel's past failures. For those of you who invest online through SoFi stocks or SoFi ETFs, you have to ask yourself, is there any other company with this much visibility into their 2027 and 2028 revenue? Currently, they have over $500 billion in backlog visibility. That means the chips they are going to sell next year are already largely accounted for in terms of demand. The macroeconomic pressure is the only thing truly weighing on the stock. We have a Federal Open Market Committee (FOMC) meeting coming up on April 28-29, and there's a lot of speculation about interest rate paths. High rates generally hurt tech valuations, but Nvidia's earnings growth is so high that it practically ignores the standard valuation models. While an intelligent portfolio or a SoFi robo-advisor might suggest diversifying into less volatile sectors, the reality is that many growth-oriented Fidelity wealth management clients are staying put. They see the AI transition as a structural shift, not a cyclical one. The risk, of course, is that if big tech ever decides to slow down their capital expenditures, Nvidia will be the first to feel the pain. But as of today, those spend numbers are only going up. Comment below how many shares of Nvidia stock you currently hold and what your average cost basis is. I'm curious to see who caught the wave early and who is just getting started. It's also worth noting that the retail sentiment on the Robinhood app remains overwhelmingly bullish, even as institutional smart money on interactive brokers trading platforms shows more nuanced, hedge-focused activity. This divergence is often where the most interesting price action happens. As we look toward the future, the primary catalysts are the global rollout of the Grace Hopper systems and the expansion of the sovereign AI market. Countries like Saudi Arabia, the UAE, and various European nations are now building their own national AI data centers. They don't want to rely on American cloud providers, so they're buying the hardware directly from Nvidia. This opens up a multi-billion-dollar market that didn't exist 3 years ago. The expectation was that Nvidia's growth would slow once the Big Four, Amazon, Google, Meta, Microsoft, finished their initial builds. The reality is that the rest of the world is just starting to wake up to the need for localized compute power. There are, of course, risks that we cannot ignore. Export controls to China remain a significant hurdle, though Nvidia has managed to navigate this by creating specific chips for that market that comply with US regulations. There's also the potential for antitrust scrutiny as they become more dominant, but for now, the momentum is undeniably to the upside. If you are using investing sites to find the next big winner, you might find that the biggest winner is still the one right in front of you. Whether you're looking at Apple stock, Tesla stock, or other tech giants, Nvidia is currently the engine driving the entire sector's valuation. To summarize the landscape, Nvidia is currently trading at a premium for a reason. The expectation of a slowdown is being met by the reality of accelerating infrastructure needs. The common belief that custom chips will kill Nvidia's margins is being challenged by the fact that Nvidia is moving into the power and networking space, making themselves even more indispensable. The stock's jump to $208.26 on Friday is a reflection of this realization spreading through the market. If you are managing your own online investing or using a Fidelity trading platform, you're participating in what is likely the most significant wealth creation event in the semiconductor history. Ultimately, the gap between what people expect, a bubble burst, and what is actually happening, a fundamental rewiring of global computing, is where the opportunity lies. Nvidia has transformed from a graphics card company to a global infrastructure titan. The reality has consistently exceeded even the most bullish expectations, and as long as the AI factories need power, chips, and networking to survive, Nvidia remains the undisputed king of the hill. Keep a close eye on the upcoming FOMC meeting and the next round of earnings, but for now, the trend is clearly your friend. The depth of the ecosystem, from CUDA to Blackwell to the new nuclear power initiatives, suggests that they aren't just riding a wave, they are building the ocean. Stay grounded, stay informed, and always weigh the market's narrative against the hard data of institutional flow and revenue visibility. Nvidia isn't just a stock, it's the heartbeat of the modern tech economy. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, bell notification for more updates.